And now I come to our last speaker, which is José Fernando Figueiredo. I must admit, I was a bit tempted to ask you to talk about your family business, which is wine, because that would have been a fantastic, smooth shift to the dinner.
I have a great 2011 port wine, so if you want to. We just won, it was classified 97 points in 1,200 wines around the world. We were fourth, so not bad, with a super gold medal. So if you want to join, I'll invite you later on.
So, but of course we did not invite you to talk about wine. We did not invite...
I'm also a businessman, so I'm not only a financier. I don't mind to sell wine.
We did not invite you to just have a smooth shift to the gala dinner, but we really invited you for real work. And we invite you as the chairman and president of the European Mutual Guarantee Association. I read with a lot of interest that your members are representing 80 billion of guarantees in different countries of Europe, and Russia, Turkey, and another country, which I can't remember now. So, but it's that you have a very broad European portfolio, not only of members, but a very broad number of billions and of clients. So we are very interested to hear from you what your experience with regard to venture capital, guarantees, the roles of guarantees is, and how you see how to bridge the gap over the valley of death. Thank you very much.
Thank you very much. Well, good afternoon, everybody. Well, first of all, let me thank to Clara for the invitation and to give me my name to the organization. Well, the good news is that I'm the last one between a long journey and the gala dinner, so I'll try to really be very, very quick and to allow Mr. Sherman to close the session on time and give us time to go back to the hotels before the taxis. The bad news is that everything was already said from what I was going to tell, so I don't know exactly what I'm going to do, but let me start by telling you something about my organization. Is 1 minute, okay? I'm representing here, as Mr. Sherman mentioned, AECM. AECM is the European Association of Guarantees. We are a lobby association based in Brussels. We represent our members as a lobby institution vis-à-vis the European Commission. We are quite well known nowadays platform for exchanging of best practices across Europe, and not only across Europe, also around the world. We are partners of the SME Working Party of OECD, also work quite closely with the International Finance Corporation and the World Bank. And of course, our main partner is the European Commission, because we are based in Europe. And well, we have connections with Latin America, we have connections with Asia, because we are as you very well pointed out, Mr. Chairman, we are quite sizable for European figures. We are representing nowadays around 160 billion euros in credits to 2.5 million SMEs as of today, which of course, as you mentioned, give us a broad basis on what is going on, essentially on small businesses. I must recognize that, let's say, mid-caps and big corporations are not our main focus, so we don't know much about it as an institution, so I will focus my, let's say, my comments essentially on the knowledge I have from the SME European picture and from the SME European side. So, as you can see, these volumes of guarantees, as it was also mentioned by Jana regarding the venture capital and the private equity business, are very different across Europe. We have countries where the guarantee business is more influent and has a bigger size as compared to GDP. We have others that are still in a very small position. And so this is basically ACM. But as I was invited to talk about bridging the gap between R&D and the market, and what is going on in Europe regarding that, and most of the examples were already mentioned by my colleague. I will probably focus, if you allow me, before going back, let's say, to final, more let's say, political or suggestions on political actions that could be taken from the industrialist's perspective, from the small businesses perspective. I will focus in one or two of the European Commission programs that I think the European Commission actually in Europe, as you know, for those that are Europeans, we know it well. For those that are from abroad, from outside Europe, probably you may have heard about it already during this conference. In Europe, we have really, the European Commission is trying to catch up in certain areas with essentially with the most development blocks of the world, namely the US, of course. We have a gap, in fact, in what concerns the capacity to pass the knowledge that we get from research and from investigation, from direct R&D, where Europe actually is one of the big investors of the world, even in what concerns percentage of GDP effort, to what we call innovation and, let's say, marketable products. And this is probably one of our main goals for the current moment. We've been doing, the European Commission has been supporting quite a lot the research and the R&D and the investigation, and now has been launching in the past years a few programs that are, in my perspective, making a difference. So I think we are in the right way. The Commission has been, let's say, trying to tackle this gap in a very positive way. Of course, this takes time. This is also cultural. It's not easy sometimes to, let's say, for example, to ask the VC investors in Europe to behave like our colleagues from the other side of the Atlantic. The venture capital investments are not as much as we wanted. But okay, let me go very quickly to this, to some background. We had the first program from 2007 to 2013 that was what we call the UFP7 plus the IB joint instrument. From this program there was a very big one called RSFF, where the big corporations could find financing to research and innovation. We're talking about 2.9 billion euros in approved loans, or around 11 billion more or less, Clara, of effectively disbursed or contracted loans, which is quite a big amount of money. And these allowed a lot of big corporations in Europe, essentially big corporations in Europe, to keep developing their programs of innovation. We're not talking here about venture capital or let's say pure venture capital, but up to a certain extent, these loans had, of course, a risky characteristic, and that's why the European Commission and the public policies in Europe were supporting these innovation and essentially research programs. This was aimed at help companies or institutions that were in the market, and it was quite successful. I mean, I can tell you this not from the EU perspective. I'm not working at the European Commission, so they didn't ask me to say this. I was one of the evaluators of the program, so I'm talking from the independent, let's say, research and analysis that was made by us to this program. Okay, and one of the issues that was raised during the first evaluation of this RSFF program, as everywhere in the world, because there are some similar programs in other places of the world, but one of the issues that is always raised is what to do with the smaller companies, namely with the manufacturing and with some small industrial companies, because these big investments or these big supportive programs that don't reach enough or in a capable way the smaller companies and the mid-sized companies. So what was decided by the Commission, and again in our perspective very well, was to, let's say, size down, to step down the program and to create a second one that is called RSI inside the RSFF, that allows nowadays the small businesses to go and to get financing for innovation through this program. So again, with this, it is possible for companies with less than 500 employees, first the small and medium-sized enterprises that are 250 employees, and later on the mid-caps with less than 500 employees, to get credit, access to risky credits, let's call it like this, not in the sense that they don't support viable projects, of course they do, but in the sense that they are financing research and innovation that naturally are, let's say, the riskier parts of the daily operations of a company. So some criteria were set to consider a company as an innovative one, namely to allow a bigger number of SMEs to apply to this program. And as you can see, one of the criteria over there is that the company should have had an investment from a VC fund or high-tech fund, which of course is also a way to promote also the equity side of these investments. So what we're trying here is just to get financing to the projects on one hand, but also to, let's say, to increase the willingness of a certain class of assets, investors in a certain class of assets that is riskier and that is not very common in Europe, particularly in continental Europe, that, like Diana very well mentioned, to also come on stage and let's say, invest in this type of firms that are very much needed for Europe to keep catching up with this agenda. So now, well, this is one of the schemes, probably, I mean, I will pass it on. This is a leveraging scheme where Europe uses the European Investment Fund and local guarantors and sometimes also local mezzanine investors to make money to be available to these companies. But now, and this is important, some data that were already mentioned, that 2,900 companies, around 3 billion euros that were invested in venture capital out of 36 billion of investments, according to the figures I collected for 2012. And one of the issues that actually is raised, this is a text that is at the Commission website, so it's not my construction, but one of the issues that is raised over there, and this is important, is exactly the downwards trend in venture-backed investments is, of course, critical if we want in Europe to keep having the renovation of the economic tissue and particularly to keep having the early stage investments not to escape to other areas of the globe where they have, let's say, better competitive advantages, which is natural. I mean, this is an open world, and that it was very well pointed by our Mexican colleague. We can also face in Europe, and actually some countries of Europe are already facing it very strongly, a drain of brains, a brains drain, and we are seeing our best educated and best capable ones just to move to other parts of the world, both the other side of the Atlantic, but also to Asia, and nowadays even to Latin America or Africa, which is normal. I mean, people go where they have more capacity to develop their projects. All right, again, I think you didn't show this one, Diana, so at least I have one different than yours, not bad. So, okay, this is, as you can see, again, like in the guarantees, in the VC, the landscape in Europe is, let's say, very heterogeneous. And this is one of the, I mean, this is everywhere, of course, but in the case of Europe, this is particularly relevant because we have always, for those that are from outside Europe, this discussion coming from Europe, that is, we are a market of almost 550 million people. And actually, we must recognize in many issues we are still not that market. So this is one of the things we are building, but we still need to get there. And of course, the way investors behave in different countries, of course, is also relevant for the capacity of different geographical areas of Europe to develop and to be more attractive for investments, and notably manufacturing, let's say, high-tech investments. Okay, the future. The future, I will focus on only one of the programs, that is Horizon 2020. As, I mean, in a snapshot, I could say that this Horizon 2020 is one of the new programs that is being launched by the European Commission. I mean, we all have high expectations regarding this program because the volume of funds that was negotiated by DG Research was quite big, so congratulations for that. They have really a very nice financial package to help us. There are some positive evolutions in the way the money can be used and, let's say, can be co-invested both in venture capital funds or in guarantees or in other forms of helping innovation and research to get. And the focus of this program is exactly what I mentioned before, that is, we will still support basic research, but also we are very much focus now in transforming this research, this investigation into marketable products and to bring it to the market in the sense that they should, let's say, in the end, not all of it, but I mean a substantial part of this investigation should lead to the development of innovative products or new products wherever. I mean, as it was very well mentioned by William at the beginning, I mean, in one of his advices that I took note, of course we should be very careful in investing in these disruptive technologies as such, but we need to create something to evolve. So I will let Mr. Chairman, I will let the slides down there, so I will avoid some details of these, if you don't mind. Again, the view is the same as everywhere, as our Mexican colleague mentioned. I mean, we all have the view that we need to support the market gaps are essentially in the areas where from the very early stage and from the idea to, let's say, the first round financing phase, I mean, all the rest, we all agree that the market should, let's say, support and finance by itself. And so this is the vision. We will, well, I mean, the main objectives, of course, as I mentioned before, is to improve this capacity of access to debt financing for these small businesses and mid-caps. And of course, we will ask the market, we will support the market to provide them with guarantees and venture capital to allow financing these businesses. All right. I'm going to try now to keep my last 5 minutes not to speak about the Horizon 2020. I think I already made you quite a good propaganda, Clara. So I'm going to move now to my wines and my industrial experience. Well, I mentioned there that my family has this very small wine company, which is true, of course, and can be checked. It was not a joke. One of my red wines was really got last week one of the best red wine prizes in the world. But I can tell you one thing as a small entrepreneur, and we had one of the most well-known men's shoes factories in Europe, in the family. We just sold it 10 years ago. So we have some industrial background. And I can tell you from my experience that, of course, this single financing innovation or research is not necessarily only about high-tech. As I said in my CV, I have with some friends a very small spin-off venture capital fund. So it's my weekend toy, as I was telling to them. So we do invest in some spin-offs, and some of them are industrial, actually, manufacturing companies. One of the things I can tell is that when we tried to find financing to support some innovative projects we had, even in a traditional industrial companies like a shoes factory or a wine processing company. In Europe, this is not really an easy task. Even for people like us that are, let's say, also in the financial world, we are experienced in dealing with these. I started my career at 3i, so I mean, I'm from the venture capital and the private equity business. And one of the things, of course, the first note, of course, this is cultural, in my view. I think one of the problems with, particularly with continental Europe, is that we are very much averse to take risks. And this will take time, to change. This takes us a long period to convince. For example, there are lots of very nice family businesses that, in fact, don't want to open the capital. They don't want to have a partner. They don't want to share the information. They don't want to share the risks, but also the potential rewards. And so this is the first thing we need to move, not only, let's say, from the supply side, also from the demand side. There are things we need to do in Europe. Necessarily, we will all have to do it together. The second one is that authorities, not only at European level, but at member state level in Europe, sometimes really tend to complicate our lives. And bureaucracy and paperwork and red tape, there is a big effort that is being done by many of our authorities, both at the European level and national level, but we still have things to move from our way to really have a better investment environment. And, of course, there is a final, it's not the only one, but there is a special area that is almost forbidden to speak in a country like mine, that is one of these sovereign debt problematic countries. I'm for Portuguese. That is taxation. And Again, if you allow me to quote you again, William, I mean, you mentioned exactly to raise money where the tax structures can allow it to leverage the things. And one of the problems we have in Europe is that it's not easy to have a global market when some or a few of us are kind of fiscal paradises and the others don't. And somebody needs to tell this very loud and clearly, because we don't have a single market for investors in Europe. Things are getting better. I mean, the crisis also had some advantages. We had to clarify some issues, but we still face some competition in certain parts of the European continent that don't allow us, unless, of course, we all move there. We can all move there, naturally. But I think the single market is not necessarily that. So from an industrial perspective, let's say, for the recommendations in what concerns venture investing or venture raising, my previous colleagues already mentioned everything. I mean, I really don't have much to add. I subscribe all what they've said. And this was just, let's say, a note on what I thought could be a few information regarding Europe. Let me, if you allow me, Mr. Chairman, just my last minute to make a small inquiry to the room. First question is, whom from you is living in Europe? Just raise your hands. Europeans, okay, almost all of us. The US, outside both Europe and US. All right. And second question, those from you work in industrial manufacturing companies? I also do. Okay. And finally, who tried to raise equity, venture capital to finance one of your investments? Probably none of you, because you're from, okay, not bad. And the successful rate, who did it? Who got it? Thank you very much. This is it.
So, José, thank you very much. You started to be interactive. That's very good.